It is Wednesday, the 29th of August, 2018, and the S&P 500 finished at another all-time high here, adding about a half of a percentage point today. And the short sellers are really feeling the pain as this market continues to grind higher. There's no reason to look to sell short unless you're a scalper. Right now, our more important level of potential support this week should be found down at about 289.5. That's close to the volume-weighted average price for the week. That's this level right here. And below that, we have the rising 5-day moving average. So we're still clearly innocent till proven guilty. A lot of people are trying to short this market because they think it's up too much, and then it just kind of becomes a little bit of a perpetual short squeeze machine. Now, the volume's been light, but as always, only price pays, and our job is to manage risk based on what price action does. If you're concerned about volume, then you can look at that and maybe start to reduce position sizes, but it certainly doesn't mean sell short. The volume will continue to be lighter for the rest of this week as we head into a holiday next week. I myself won't be here Thursday or Friday. The NASDAQ also at another new all-time high, and this momentum is picking up steam. If we take a look at this level right here, we could call this point A at 174.5, and then point B right here. Let me just get that a little bit clearer at 182. So if we look at that in terms of about an 8-point move, point A to B, and then add 8 points to this 178. Let's just call it 179, just to 178 to be conservative. So we add 8 points to that, and we've basically met the measured move, this being point A to B, and then here is B to C. And then C to D would be right here. So my trend tool wasn't drawing properly, but it's basically met its upside objective. That doesn't mean sell or sell short. It means raise your stop, be aware of what the risks are. We were, had a super strong day today, above the VWAP the entire session, and so far this week we've seen that the weekly volume-weighted average price has offered support on any pullback. So be aware that starting tomorrow will be at 185. The Russell 2000 bounced off of its 5-day moving average on Tuesday and continued higher here today. So not an all-time high, but actually it is on a closing basis. It is a new all-time closing high for the Russell 2000. Semiconductors continue to move higher. They're not finding resistance at this prior peak, and right now we're against this trend line as well. So we have the possibility that the market will slow down in here, but as I always point out, just because we're extended and we're at a potential level of resistance, we have to look for evidence, and there is zero evidence that there is resistance being found in here. So I think the key support we want to see hold the rest of the week is probably about 108. Biotech's following through nicely from their breakout, and this market continues to grind higher. It's catching up the way we expected and hoped that it would. Maybe I should say hope, not expected. But it's still got room to run here in one of the healthier looking groups. We also spoke about the XLE and the potential that it would find resistance over here. So when this market was down at the 200-day moving average, it looked like it had the potential to rally up and find resistance and then fall. And as I said, we look at this level as potential resistance, but we only know resistance after the fact. In this case, there is zero evidence that there was a resistance found there. If we look down to a 15-minute time frame, you can see that this rally, here's the volume weighted average price from that gap lower, and here's our rising 5-day moving average. So there's no reason to be a short seller while the momentum continues to be higher in the XLE. That'll do it for me. Have a good night. Thank you.